what is your strategy to improve financial performance? Okay, I think we had a very long session just now with the shareholders, and also it was deliberate because we took the opportunity because I'm new and the new team are in place, and we are embarking on a transformation plan for Hektar. I think we hear our shareholders today, and we are actually, in fact, all of those plans that we have discussed are ongoing plan. It is not a afterthought or 11 hours plan. Those plan has been in place since I came into Hektar. And as I mentioned earlier, I think I make a very drastic forward-looking statement in the presentation that in terms of Hektar's performance, we look at the profile of Hektar's asset. We have an old asset, which is good asset. For example, Mahkota Parade, which is 30 years old. Subang Parade, 36 years old. These are old asset. And old asset, when you talk about old asset as compared to newer asset, you need to continue to spend money to do enhancement, to maintain that quality in order for you to charge rental, which is market rate. Now, moving forward, the only way for Hektar to improve performance is, of course, to increase the yield, number one. Number two, to preserve the value of whatever asset that we have. Number three, to continue acquiring new asset, which is deal accretive. Meaning, any new asset that we acquire must be higher or equal our hurdle rate, of which we have set ourselves quite a competitive rate at 6.5%. So on top of that, I think we've also discussed about the possibility of looking at the crystallization and monetization of our existing asset. Why we think that this is also important in terms of improving the financial performance is that you see the price of Hektar now is heavily discounted against the net asset value. The question is why? The answer is quite simple. If you look at the 10 years, 12 years financial performance of Hektar, Hektar has been paying a dividend of 10.511 cent per share. But now Hektar is paying lower dividend because the return and the income from those assets are diminishing. That's point number one. Point number two, in order to increase this income back to a better level or get a higher rental, we need to continuously spending into the asset. Hence what we are doing in Subang Parade. We are putting a very sizable investment in terms of the asset enhancement to basically lift up the value at the same time and also realize a better rental in terms of the yield. So I think all these things is a combination of effort. Increased yield, asset enhancement, acquisition of new asset, and also looking at ways to potentially monetize old asset and redeploy those capital into a new acquisition. Okay, Sean?
Thank you, Encik Zainal, for your question and for your very informative answer. Maybe we can go to the floor now. You can just raise your hand if you have a question and let us know which media you represent.
Oh, okay.
Maybe the members still need a bit more time to prepare their questions. Let me ask you another question. What sets Hektar REIT apart? How do you differentiate Hektar REIT from other competitors?
I think you need to look at the business model of Hektar and also the asset of Hektar. Hektar has first, when it was listed in 2006, it was the first retail asset. So retail was actually the meetings. Retail was the focus. So that's the niche then. Even at that point in time, Sunway was not listed yet. And we listed Hektar in 2006. So that is the niche. Now Hektar today and Hektar moving forward is going to be a different Hektar. Why I say this is because, as I mentioned, retail, we've learned the lesson from COVID. How COVID affected the world, how COVID affected retail, and also moving forward with all this trade war between America and China, right? You are going to see a potential, probably setback in terms of the growth. Okay, so retail will be affected. Okay, so I think moving forward, as we have actually presented to our shareholders today, we are looking at other high growth areas education, digital, industrial, and also possibly also we are looking at potential renewable energy concession. Because I always think that being a REIT, anything with a secured cash flow, with a secured tenancy is all REITable. So this is where I think Hektar will build that niche moving forward. Of course, as you can see, moving from 100% retail to new diversification takes time. In fact, the KYS was signed in 2003 and completed only in July last year, 2024. So every transaction takes time. But as I said, we have all the deals pipeline in place, and we are in the position to choose. And at the same time, I think we are also looking at whatever asset that we have now, we will try to maximize the return in terms of capital valuation and also the enhancement. So I think this is where Hektar is going to be. This is how we are going to put ourselves in that niche position. And to compare with others, I think it is not fair, because even if you compare two different shopping malls, it's two different model. Like Subang Parade, you cannot compare that with Sunway, because Sunway is a different league, Subang Parade is a different league. So in that sense, I think you need to look at the entire model, how the portfolio and the basket of asset that Hektar has, and how we position ourselves. But of course, I mentioned earlier also in the snippet to the shareholders, we are looking at high growth digital side, and we hope that once Hektar used to be the first retail REIT in Malaysia, maybe we will be another first in terms of another asset class investment.
Thank you, Jaylana. Maybe we can go to the floor now. If you have a question.
Any question?
Hello. So I'm Yan Ching from DH. So I want to ask about the current yield on the Subang Parade, and what is the expectation after the AEI on Subang Parade? Like, what is the occupancy rate, and also the reversion rate, and also the yield after you do the AEI? Subang Parade.
I think the occupancy of Subang Parade now stands about 84%. And then based on last year's, we closed at about 3.4% yield for Subang Parade, if I'm not wrong. 3.4% yield. 3.4. Yeah. So Subang Parade did 3.4% yield last year. Now with the AEI that we are putting into in place, you know, the process always, we are putting a very high hurdle for every new tab that's coming in terms of the renewal of the tenant. We have put in a higher hurdles in terms of the what do you call that, rental reversion. And we have actually, in fact, we can share with you, out of the 10 tab or whatever comes, normally we'll take 2 or 3. So we are very stringent now, especially for Subang. So anything that is coming with below the hurdle, we won't accept it. And now, also I want to add also in terms of the certain tenant that you know. If you're familiar with Subang Parade, who's familiar here with Subang Parade? Thank you. One of the first tenant, that is McDonald's, has been there for 18-20 years. And you know, with all this boycotting, McDonald's globally is, Malaysia also is affected. So we saw that also happening in Subang Parade. Yeah, because McDonald's, we have been working with them together because their business has been quite bad. But in the end, we are also sad that they have to leave. But from looking from the, as I mentioned earlier, in terms of the return moving forward, that leaving of McDonald's is also opening up another opportunity for us, because McDonald's actually occupy a very prime spot in Subang Parade. And we are now in the position to basically recreate that space for a better tenant. So I think moving forward, as to answer your question, and also based on what we're saying, we will be very vigorous in terms of choosing who we want rather than just take whoever comes to Subang Parade. Maybe you want to add?
Hi. Okay, just to also add, we have actually seen for the last quarter for Subang Parade, we've seen positive reversions. As of last year, 2024, the reversion was actually 6.5% for Subang Parade. Upon completion of the phase 1, we are looking at least 90% occupancy. for Subang Parade. And in terms of the reversion, typically from the past projects that we have done, we look at high single digit or double digit reversion. And in terms of valuation as well, our assets increased a minimum of like 14-15% to over 50% in terms of valuation. Thank you.
Next question.
Thank you, Chair Zainal and Ms. Sabrina. Maybe we can move on to the next question.
My name is Thomas. I'm from Malaysian News Channel. What is the occupancy rate for Segamat Central? And do you foresee an increase in valuation for Segamat Central in the near future? Thank you.
Maybe I get Sabrina to answer. She's very intimate with the problem.
Thank you. Currently, Segamat Central stands at 58.4%. Currently, we are undergoing anchor reviewing strategy. During COVID, you see, our strategy was initially occupancy first, depending on the survival of our mall. And at that point, if you remember, only supermarkets were open. So this is now our window, 2-3 years after we can only see the results upon the expiry of the tenancy. And this is currently our window to actually bring in a better tenant. So with a new anchor tenant, our occupancy is expected to go above 80%.
I think just to add also on that point, when we also look at Segamat, there are areas that is sunk that we have actually reactivated. For example, recently we have converted the rooftop parking to become a pickleball. And this one, since completion, we are seeing a 20% jump in terms of our footfall. So this, I think, also brings us to the next question. Once you bring up the footfall, then we are able to market the the property to better brands. Because previously, without the footfall, of course, the brand will ask you, okay, what do I get? You know, am I going to get my sale? Or am I going to close my door after opening 1 year? But with this kind of initiative that we're doing now, that we are seeing a tremendous improvement of footfall, then our ability to go and talk to those tenants are much in a better position. Of course, mentioned by Puan Sabrina earlier, the previous strategy for Segamat was more of survival. Now, after COVID, 2 years, 3 years down the road, all these old tenants that came in during COVID are now being purged. So we are in a better position to basically select those tenants that we want. And the last point I also want to add, with the opening of the ETS station, I think we are looking at the numbers, whether moving forward we can try to curate some of the offering to cater for this TOD, transport-oriented development offerings. I think we are still looking at the asset, but rest assured, actually internally we think that we can turn around the asset within the next 1 to 1.5 years.
Okay, thank you. We'll move on to the next question.
Wacha from Oriental Daily. Manuel, just now you mentioned looking for the digital asset. What kind of digital asset looking for acquisition? Is this a data center?
We will make announcement at the right time. But maybe in terms of the business model, I just answered that indirectly. I mentioned earlier also to the shareholders that moving away from one to another, you need to see the power of the diversification. What is the power of your diversification? In our case, we are in retail business. Originally, we've been in retail business. We've been in retail business for the past, since 2006. So, to diversify into something, you must have the new model that actually complement or strengthen your current business model. So we are looking at those assets that can actually increase our weighted average lease period from 1.2 now to where at least more than 10 years. So in order to do that, of course, not many assets that is able to provide that kind of long tenure. You see, education, we've presented that in our previous acquisition. We've increased from 1.1 years to 6.4 years by acquiring College Yayasan Saat. So digital asset is also another area where we see that unlike mall, when you build the mall, you have a limited, net lettable area that you can let it out. But when it comes to digital, the scalability is different. It's tremendous. It's all about traffic, it's data, and all these things. So to me, I think moving forward, in order for us to prepare Hektar to become a foolproof REIT with a longer terms of expiry, with a secured cash flow in order to offer a better yield, we need to consider this kind of alternative asset class. To answer your question, I hope a little bit snippet, but we will make the announcement at the right time. Yeah?
Thank you very much. We have time for one more question.
Maybe one more question from the H.
May I know what is the criteria for you to select the tenant? The requirement of selecting the tenant, like just now you mentioned the Subang Parade, right? And also the Segamat, like the old tenant, and you have positioned yourself at better position to select a new tenant. So what is the criteria of selecting the new tenant? Thank you.
Okay, so I think maybe I'll pass the mic to Sabrina, but to address that, you see, we constantly look at the tenancy really within all our malls. For example, we take Sungei for example. Our content of entertainment, family edutainment is quite low. But over the years, we see that there is a need for us to basically provide more of these offerings. So I think in terms of choosing, in the past, we didn't really have a choice to choose who are the tenants to come. Because like I mentioned, the COVID time, you just want to survive. But now with all this purging, this, new tenant coming in, with the plan that we have, we are in the position to choose who we want and what kind of content we want for this mall, what kind of content we want for Segamat, and what kind of content we want for Makota. So one of the criteria, of course, the overall planning of the offering. For example, I think Subang Parade, yeah? Subang Parade, you see that now we are bringing in more F&B, because we see that F&B is something that was a bit lacking, yeah, in terms of the mix. And also, we mentioned earlier, next to our mall, News Empire. They also did certain decisions which we feel that an opportunity for us to grab those clients. So Subang Parade is not focused on whether it's halal or non-halal, because we provide those F&B catering that covers both halal and non-halal. And with the decision of our next door competitor of choosing only on certain area, we are actually grabbing some of the client to Subang Parade. So one of the mandate also is the surrounding, the competition forces. Most importantly, of course, is the hurdles. I mentioned about Subang Parade. We are putting a minimum hurdle of at least 6.5%. So any new tenant that we renew or any new tenant that we bring in, first must fit with the overall tenancy. Second, yield. Maybe something I want to add.
Okay. First of all, I need to highlight one of Hektar's strengths, which is actually in localization. First, going back to our basics, what we need to know is our customers, right? So we are very much data-driven. We rely on the market research that we have on our demographics. On the ground as well, we also collect data on our customers to ask them directly or indirectly sometimes, what do they want, what do they expect to see in our malls. We engage directly with our customers. Yeah. So from that, we did our own analysis on whether the brands that approach us or the brands that we approach are strategic or not. We also rely on tenancy mix. Every mall is different. So in terms of curation of each mall, we really look at the tenants that we have, the demographics that we have, existing tenants that we have. And in terms of what is trending, sometimes not necessarily what is trending is suitable for our mall. We look at it long term, which tenant can actually sustain. So what we have done from all of this analysis, for each sector, we actually have our own tenancy leasing strategy each year crafted by our team. Yeah. So that explains basically where we are in terms of direction, where we are heading, whether we are increasing the components of entertainment, edutainment, kids, or multi-generational. Okay, thank you.
Maybe one more point I'd like to make for Kulim Central. We also took a drastic decision at that point in time because we had a big space tenanted by Giant, and we took a very bold move to reduce half of the space, hence fact in terms of occupancy, but bringing in a better brand like Mercato. Why the impact of Mercato? Because the moment we actually put in Mercato, we actually uplift the profile of the mall itself. And because of that decision, even though we have to take a short-term hit on the occupancy, we are seeing now the interest coming from a better brand that we can bring to Kulim. Because now they see Mercato, okay. So I think this is also the things that we are doing now. And we are not afraid to take those kind of moves. I mean, sometimes you have to take a short-term gain for a longer sweetness,
Yeah.
So I think that's what we are doing, and of course these initiatives are ongoing, and you'll be seeing hopefully more new tenants coming like Subang Parade. Please come to Subang Parade. It takes time. We expect to complete the AI in first half 2026, but the way we manage the asset enhancement exercise is to focus on the internal first, the lift and the escalator, bringing at the same time the tenant remixing, new name, new brand, and then the last we'll deal with the physical aesthetic value on the outside of the mall. So that's the strategy.
To add to what Encik Zainal said, another example for Subang Parade is that when we did our studies, we also realized that in terms of our tenancy mix, we are not curating enough for a certain segment, for example, the non-halal section. So what we have done is actually to bring in more non-halal brands to cater to our customers. And on top of that, we've also learned that we have a lot of families with young children, which is why we have brought in Baby Shop and the likes of Game On to our mall.
Thank you. Thank you very much for your very informative and descriptive answer. This concludes our press conference.